located in Florida. So she works on those as well as buying our insurance annually for all 10 of our V communities. With her is Stephanie Stewart, also here. Stephanie has been working with us probably 8 years, 10 years almost.
Over 10 years.
10 years with Willis, as a representative with Willis, and now she is with Marsh, who is our new partner. And the team that was with Willis has all gone to Marsh. So we have a new broker. That's correct. Okay. So Diane and Stephanie will go over today the coverage for the community at large. She also will cover what is insured for you inside your unit as well as what's covered for the whole community. So, Diane, take it away.
Thank you, Tom, and thank all of you for having us. We appreciate it. We have just a very short presentation, and then we'll have some questions and answers at the end if you'd like to review anything further. I'm just going to step back here so I can see the presentation as well and look at all of you. V insures all of our, sorry.
Right.
There we go. So V's property insurance program insures all of our locations, all of our community locations, our corporate office, a few other office spaces we have in a home health operation. So it's one property program for all locations. So when we're reviewing this, it applies to Tie Point as well as some of the other V communities. I'm sorry, I advanced it too far, so just bear with me a second. Let's start again here. All right, so our property insurance program is for an annual period. It's from 12/31 to 12/31. So 12/31/21 to 12/31/2022. And it includes insurance for what we call real property, so physical assets like these buildings, as well as some personal property, so some of the common area personal property, business interruption, extra expense. So if we had to make a claim and there was additional costs, that would be considered extra expense, loss of rents, as well as some other auxiliary type coverage. Our insurance is really a program that there are many participants, so many different insurance carriers are included on our property program. We have about 20 different insurance carriers that take just a piece of what they want to insure. So the combination in whole insures our property for direct damage based on full replacement cost, so whatever the cost is to replace it, based on a like, kind, and quality. So if this building was to be totally destroyed, it would be reconstructed similar to what it is. And if the cost last year was a certain value, whatever the replacement cost is today, that's what it would be covered under our insurance. We have up to $350 million, that's the limit, per occurrence. So for every event, there is a $350 million limit. And like I mentioned, this program covers all of these community locations and our operations. This is just a list of some of the sub-limits. Although our policy is $350 million for kind of all other perils or what you would consider like fire damage, there are certain catastrophic type losses that the insurance carriers put limits on, so we call those sublimits. What's particularly of interest to you here would be like named storm. A named storm event would be a hurricane, and instead of the $350 million, the policy would cover up to $80 million per occurrence. If it was a flood event, it would only be $50 million. I'm not going to go through this list, just pointing out a few that are important. One that we have made claims on for Tie Point is the emergency evacuation. So there have been times where you have, it was mandatory that the community evacuate. And when that happens, we put in a claim under this emergency evacuation expense. And that sublimit is $2.5 million. Any other? Okay, good. And with every claim, you have a deductible that applies, like you would in your homeowner's insurance. You know, homeowners might be $1,000 or $5,000 deductible. So for our insurance, for certain catastrophic type events, the deductible might be a little bit higher. For example, deductibles for flood is $1 million. Named storm, which is really the exposure here for a type of loss, a hurricane type loss, the deductible is really based on the properties or the assets that got damaged, whatever the value is of those particular structures, and then a percentage off of that. So it's a 3% of that particular structure. So for this building here, if this was the only building within the community that was damaged, it would just be 3% of the value of this building alone. It wouldn't be 3% of the whole entire community. Some other deductibles, earthquake or earth movement, it's $100,000. The emergency evacuation one, the one that we have made claims on several times, there's a deductible of $100,000, but the limit is up to $2.5 million. There's a water damage deductible. So if there was water that got damaged, or there was a pipe that bursted or leaked, that deductible is up to about $150,000. And then all other causes of loss, for example, like a fire, the deductible is $100,000. Okay, good. And on this particular slide, I think the important piece to really point out for this slide is that if there are multiple covered losses at the same time, you would only have to pay one deductible. So therefore, you wouldn't have to have a deductible for, as an example, maybe a named storm and maybe a flood. You would just pay the larger of those deductibles. Yep, correct. Good. And typically a year, we try to come every year, but unfortunately the last couple of years, we have been doing it via a Zoom to a smaller committee. But when we do come, we have questions from you, the residents. And I've added a couple of those questions here, just hopefully to be able to address what I think you're going to ask. But does our insurance does V's property insurance cover business interruption? So if you were to leave, have to, evacuate, and you were gone for a long period of time, that loss of revenue would be covered under V's insurance. Part of my job is to keep a schedule, what we call a total insurable value schedule. And what I do is have every single structure that is part of V identified. I include on there the square footage, the type of construction, if it's, siding or brick type of frame, is it wood or steel, type of roofing material, and all of that information goes to our broker, which goes to the underwriters. But what we are able to do with that information is to come up with what the insurable value is for each structure. And so for Tie Point, we have a total insurable value that's included on the schedule that we give to our broker and the insurance underwriters. The total insurable value is 71+ million. And that's broken down valuation of the asset, of the contents, which would be the public spaces, as well as what we believe the potential is for business interruption. And although that value is stated on a schedule, if there was a loss, we are not limited to that value, because for like all other perils, the value under our policy, or the limit, is $350 million. So we're not tied into, if today it costs $80 million to rebuild the entire community, then that's what would be under the replacement cost of like, kind, and quality. And this information that I provide our broker, every couple of years we run it through a valuation system to make sure that our values are updated and current. As you may know, this last year, construction cost has increased substantially. So for our renewal on 12/31/22, we will have addressed that, looked at those valuations, and it's likely that the total insurable value that I report on my schedule will have increased, but we'd still have that $350 million limit. So again, this is just talking a little bit about the sublimits and the maximum, the $350 million that's in our policy. There are certain sublimits for events, catastrophic events like flood and named storm. On the named storm, because that's really the exposure here, there's an $80 million sublimit, so that's the most that we could actually claim under our current insurance. With a deductible, and the deductible has a 3% of the value, so if the entire community got destroyed, it would be 3% of that 69 million or 71 million if we're including loss of revenue. But the minimum amount of deductible that you would have to pay as a community is $250,000. So if you only had one structure that got damaged, 3% of that one structure is going to be less than the $250,000. So if we make an insurance claim, we would have to at least pay the $250 deductible. But then the reimbursement would be based on the replacement cost. And I thought we inserted this slide because this really identifies specifically what is covered under V's property program. So if you look at the kind of the list, it is toilets, bathtubs, showers, faucets, sinks, countertops, cabinetry, finished flooring. This language is actually in our insurance policy. So we wanted to make it really clear for this location, these are the items that are covered under our property insurance. What's not included are things that are your personal property and your contents that you should be covering under your own insurance. And that is furniture, fixtures, meaning light fixtures. If you had a movable island that you bought as, from one of the furniture stores, that is not a permanent cabinet, and therefore it would have to be covered under your insurance. So hopefully, one other item I wanted to mention is on the walls. So the walls would be covered under V's insurance. The drywall would be covered. But what wouldn't be covered are any of the surface painting, molding, wallpaper. That would not be covered under our insurance. That would have to be your homeowner's insurance. Any other? Okay,
Covered it.
good. All right, great. So that's the very short overview of our property insurance program, but I'm certainly willing to address any questions or explain anything further. Yes, sir?
If a named storm damages more than one B property, and the limit, of course, is $80 million, is that $80 million spread among those properties, or is that per property?
It would be per event. So if you had a named storm that hit multiple properties, it would be for the properties, and the claim recovery would be based on allocation of the loss.
So it would be prorated. It'd only be $180 million for the whole event, no matter how many properties were damaged.
Yeah, and generally what has happened, and we've seen it, we've actually experienced it, you may have like a Hurricane Irma, for example, that came over from the west coast of Florida, really substantially caused damage on the west coast, but then it continued, and it did cause some damage in our other two Florida communities, as well as a little bit of damage here at Tie Point. Plus, I believe you also had emergency evacuation expense, so there was coverage there as well. But when it starts coming mainland, it might cause some damage, but we're not generally talking about the substantial damages that when it first hits land. Yes, sir.
I've been living here 5 years, and I haven't found out where the golf course is that you have listed there.
Well, a putting green. Do you have a putting green?
Yeah, we do.
I think it's a golf course / putting green. But we had to insure that separately because there was, I think it was Hurricane Matthew, but don't quote me, it was one of the hurricane claims here at Tie Point that we really forced us to carve out that and establish a limit for it, because there is some replacement cost that's associated with a damaged putting green. Yes, sir.
Insulation and molding kind of go together.
Well, I was looking at like crown, like if you put a decorative molding, that would be the interior. Insulation would be part of RV's property coverage.
Mold, the fungus.
Oh, mold. So if you have a covered loss, like named storm, and as a result of that, it causes mold, fungi, there is some limited coverage for that. So that we do have some limited coverage for the removal of that mold. But you have to have a covered loss first.
So that means that you'd have to go into some of the wall board in order to find out what's there.
Right. Here's an example. A tree goes through the roof. If you're uninhabitable, it rains for a week, which happens in hurricane. Mold is discovered later. It's covered up to, I think it was
2.5 million, I think.
$2.5 million. So if you had a lot of houses that were affected that way, it'd be spread over those houses.
Well,
Yeah, that typically comes along later and may not be discovered immediately. So that's kind of an additional insured, so that if the mold happens later, it's still covered under the insurance.
exactly. If you were, though, for example, to crank up your air conditioning and leave your door and windows open and creates mold, that would not be covered.
What if you have air conditioning leaks? The unit in the attic leaks, water comes down the walls or the ceiling, and I know people here have had that experience.
Yeah, that's not
What if-
uncommon,
What if mold is?
and that is covered by High Point Community Association as common property. It may not be covered by insurance.
You would have to have
The
substantial.
cause is not a cause that's covered like named storm, flood, or any of those causes. That causes normal operation in which air conditioning fans do get clogged and they do run down.
It's water damage.
Yeah, that would be
not a
covered.
main peril.
That would be covered by the association.
Yeah.
However, you leave your tub on, and take a nap, and wake up later, and it's gone down into 3 apartments, that's on you.
So it's usually sudden and accidental is kind of what triggers it as a loss. So if it's a maintenance or a long-term gradual buildup of something that's occurring like that leak that may not have been noticed, that's not typically covered by the insurance, but the Tide Point community would.
Mr. Ben, do you have a question?
It's kind of similar, I just was wondering about plumbing leaks, since we are not involved in that construction, and I don't know whether that's covered in unnamed storm situation.
Yeah, that would be a cost to the community association to repair
Yeah.
and replace.
Yeah. And if there,
Any damage that goes along with it.
and if there was a, water leak and it damaged multiple units, it would be a large enough claim that we would file it under our insurance,
Right.
and a deductible would apply.
What if you had wind and hail damage? It wouldn't be a hurricane, but what if that takes storm came?
So a wind and hail that is not part of a hurricane gets the full $350 million limit. The full $350 million limit, you're not subject to that $80 million hurricane named storm limit, and it also has the regular deductible, which is $100,000 versus that 3%. So if it was just a tornado or a very severe thunderstorm with high winds, that those policy terms are much broader than for a hurricane.
What if there's a really severe hurricane with, say, a 20-foot tidal surge? That puts some of us at risk for our own bonds. Do we need flood insurance for that?
We have flood coverage under our insurance. I can't speak to your own homeowners.
But what I'm saying is you have for the building, but our contents would be damaged by a huge tidal surge. We really need flood insurance.
You need to speak to your homeowner insurance agent. I can't really address it from a homeowner's, but that's something I would ask them. Based on the values you have in your unit, what should be covered, what you feel you want to take on as a risk. So it's really a personal decision, but generally we say you should insure that under your homeowners.
That would be what we would cover the structure.
Yes.
Flood. We would cover anything like flooring, et cetera, that she showed on that list. But for your personal items, anything you brought into the unit, any refrigerators, washers, dryers, et cetera, would be for you to cover. And I would recommend you get flood insurance.
Even if it was caused by a named event, the hurricane comes, blows out a window, and your furniture and rug is damaged. That's on us, not,
That would be on your homeowner.
even though the cause is the hurricane.
Yes, for your contents, yes, but we would file a claim for the structural. Yes, sir. Yeah.
Could you talk a little bit about what owners have to do to have the improvements that they made in their units covered by your insurance, including improvements made by previous owners?
Well, you should document the improvements so that we can always go back to see what was in place. Photos, videos, great if you can take a video, send that to other people. But you should be documenting what's in your unit so we can see the values. And so if you have a engineered wood floor, might be less expensive than maybe a Brazilian wood floor, and we would like to see that. So if you have photos that would be able to share with us, that would be great. And if you put in those improvements, keep the receipts, document it, keep a file. Don't keep it here, keep it somewhere off-site, so if you had to access that, you could.
What about improvements made by previous owners that may not be obvious to the current owner?
Right, you can't go back and get that documentation, but what you can do is take video or photos, and that will show the quality. And if there's any questions, adjusters come in and they look at those materials. So we'll be able to explain to them that maybe one unit had engineering floor where another unit had a very specific upgraded wood flooring.
But they're all covered.
Yes.
Under, all the improvements are covered. Okay, it's best for you
Structural
if you
improvements.
save receipts and take photographs or even video and save that in case it ever needs to be challenged.
Right.
And so far, it hasn't been. They've done all replacements necessary. But, you know, it's unlikely that it will be challenged, but it's always good to save your receipts for any work you had done in there or any work you're aware of done previously. You just make a note and say what was done. If somebody added a room rather than a screened-in porch, you would need to say added previously and just have the note there.
And I think the key words here are replacement cost based on like quality and kind. So if you take away anything, that's probably the best takeaway from today's is that structural elements, but that includes, you know, toilets and cabinetry, would be based on replacement cost and like kind and quality of what's currently there.
I don't know how to phrase this. There's no requirement on the manager to ensure improvements made by the individual owners, okay? And you're doing that, and I think that's a good deal for us. I'm not
It is a great
say stop that. I think it's a great deal for us. But there's a lot of written documentation to the contrary. What's in the handbook on page 7, you know, it says that the owners are responsible for their own units. In fact, that describes the boundaries as what's insured by the association. And that is quite an agreement with the bylaws, which the bylaws said that the manager is responsible for the improvements on the original build-out, okay? Not, they don't go back to the wall. And that the owners are responsible for their own improvements. So we have all that in the documents. There's really nothing in writing that's saying that you're doing what you're doing for us, which is a good job.
Well,
So I
it
guess
is
that
in the
question is
policy.
to Tom.
What?
Yeah, this language,
It is in the policy.
Mhm.
What she put up there about what all is included is in the policy.
Yeah.
So that would be the document that would guide that, because of that advantage has been greater over the years. Okay?
Yep.
So to cover it on replacement cost with like kind and quality, your receipt really just shows the type of floor you bought. The cost is going to be irrelevant because you may have done it 10 years ago. It's going to show what you had.
Yeah.
Okay, and that will be covered here without limits. At one point, there was a limit based on standard. It's continually really gotten better for you.
and we have a manuscript policy, so this language is actually in our property insurance policy. We just pulled this out from there for this location.
Yes,
Well, I just one last thing. So you're saying that it's immaterial what's in the handbook and what's in the bylaws, et cetera?
No,
I
I'm
can't,
saying that's the policy.
yeah, I can't speak to
The
that.
handbook is updated every year. We'll update it. We'll include that panel. We'll include this exact language here. And we also will encourage you to save receipts and keep Okay. Your question was, she has been buying extra wind and hail. Her insurance company recommended it, correct?
And I had to have it.
But she's not sure if she needs it or not.
And that would only be for your personal
I have
contents.
personal property.
Yeah, and that's what it's for, right?
This is in addition,
Yeah.
this is an additional policy.
Okay. I would say you only need to cover your personal property,
It-
your appliances,
exactly.
and the things you brought in the unit.
So I don't know if this additional policy is covering only your personal contents, or if it's covering,
Roof, windows.
no, you
We
don't need
cover
that.
all that.
You don't need,
It's an unnamed storm, not a hurricane, a lightning, thunder.
yeah, that would be covered
Cover
under
all
our
that.
structural.
I can get my $800 back.
Probably so. That'll
Yeah.
be your choice with your agent,
Mhm.
Somebody in
but
your office.
if we can supply this, as a handout, it'll be available at the desk if you do that. You can take that to your agent and say, this is what they told me. I think I'm covered enough under this, and they'll tell you what's not covered.
Yeah, this is very clear on what we are covering. And so if your personal property, if your valuation of your personal property, you know, maybe they're suggesting that for you because you have a high valuation, but I can't really speak to that. But I would talk to them about this.
When I bought my unit, they said all I needed myself was personal property. That was fine, I did that.
Yep.
But
Typically
then
called
my
HO Form
insurance
6,
got back to me and said,
condo insurance.
Typically under those policies,
Yeah, I would
In
push
South
back on
Carolina,
that. I would,
wind and hail is exclusive.
Yeah.
So you need to have a separate wind and hail policy.
well, that's what we don't understand. I know many people here who don't have it, and I said I had to have it, and they didn't understand that.
Well, talk to your insurance agent, but that, typically it's excluded under those policies.
and you're talking about the personal property.
Personal property.
And that's windows, they told me windows and roofs.
You don't need to insure windows and
You
roofs.
don't need
Okay,
So you may
Only your
still-
personal.
yeah.
Yeah, you may still need the coverage.
It's condo insurance, which it might be a little different than renter's insurance, but your insurance, your personal insurance agent can explain that to you.
It's usually called HO Form
They
6.
knew it, they knew it.
Yeah.
It's on my
Form
policy.
6,
So HO is homeowner,
yeah.
forms.
Form 6. Form 4 would be a rental insurance.
Maybe they know.
Yes, sir.
I think many of us are new residents, and we came to this meeting hoping to hear a little bit about what personal insurances we should carry. And I'm trying to make mental notes on everything you're saying. Okay, this isn't covered, you should do this, you should do that. Will Tide Point have any insurance agents come in and explain what they think we should have and give us some hints? For example, federal flood insurance. If we're all living on habitable levels that are 14 feet above mean high tide, what's the frequency in past history of a flood higher than 14 feet above mean high tide?
And that's something that you'll need to discuss with a personal homeowner agent. I can't address it. I can tell you what we're insuring and from a commercial property. But, you know, that's a good thing if you wanted to get a number of agents in. You know, you
Yeah,
can
we can
have somebody talk about condo insurance. I just don't have that expertise to be able to help you with condo insurance. But whatever your exact longitude, latitude, location is, they'll determine whether or not that's in a floodplain that needs special flood insurance.
Officially, how far are we above high tide level?
Oh, I don't know the answer to that.
It depends on where you're standing.
Good question.
I can tell you it's at least 14 feet.
14 feet?
At least 14 feet. Yeah. At least. Everything here is up 14 feet.
You must have
Some may
elevation,
be higher.
don't you have elevation certificates?
I'm sure we do.
Yes, yeah, but
I didn't quite memorize it.
exactly. I think the gentleman in the back,
Does Tide Point have a preferred vendor?
No. No.
Do you have a recommended list of whether?
What would that start auto
Any
insurance?
insurance
good. Thank you.
After seeing what's happening in Ukraine, is damage as a result of a war excluded? Any exclusions on the
Yes,
Yes,
it is excluded.
It is. Yes.
No, that's a pretty serious question.
But that's a standard exclusion
Yeah.
on insurance. Any other questions? No. Well, thank you. I appreciate your time. It was great to see all of you, and hope to come back again soon. So thank you. Have a nice afternoon.